Good afternoon everybody, welcome back to Market Insights with Linux and welcome to this new video in which we will do a full overview of the stock markets. We'll talk about some news that we got today. We got some economic data today, which in the end, the result of the economic data was a little bit disappointing, or at least it was very neutral, right? And I would much rather have some sort of an extreme result. But there's some hidden things in there which I wanted to discuss with all of you that I do think matter and that I do think you need to know about. Also regarding the tariffs, so that's quite interesting, I'd say. And then we'll talk about the S&P 500 in general, what I expect from that, and then I also wanted to spend some time on Tesla at the end of the video, which is doing quite well, and it actually looks like it's going for $390 and $400 again, which I think some of you are interested in as well. But that's what we're going to do. Basically, I'll try to tell you everything you need to know about the markets. So let's get right into it. Now, first of all, the news that we got today was the following. This is not it. We are not interested in German data at this point of time. No, but we got PCE price index data, right? So that's basically some sort of an inflation rate measure that the Federal Reserve cares a lot about, all right? And that's obviously why we care about inflation rate as well. So what you see right there is, like I said, it's mixed because the PCE price index year on year came in at 2.1%, lower than expected. The core PCE price index, both year on year and month on month, came in as expected. However, the previous data was revised to be a little bit higher. So then you have higher revised data and lower than expected data. That balances each other out. And then you get neutral data. So did that do anything to the markets? No. The S&P 500 today is practically flat. The expectations for the rate cuts or for the interest rates haven't changed. We're still expecting the first rate cut by September. And then we actually do have somewhat of a chance at another rate cut in October, or at least the market expects that. But ultimately, the 18th of June, when the next meeting is, we are very, very likely not going to get a cut. And then for July, it's still slightly open. And that's also why keeping an eye on economic data like this is very interesting and is almost crucial, I'd say. And I'll keep you updated on that as well. Now, we had some other data as well, and that's this, the goods trade balance for the US, which is one of the main drivers of the tariffs, of course, right? The trade balance of the US. For goods today, it came in at still an imbalance, right? So still a negative, a deficit, but much lower than expected. So that's so I'd say that's positive, and maybe that makes deal making a little bit easier, and obviously deals being made is good for the markets. Now the markets in general look fine, right? I mean, if we take a look at the S&P 500 here. Before we end with Tesla, first of all, bond yields are coming down, which is great news, was also to be expected. We might still see, I'd say on the daily time frame, there is still a possibility that we'll go for higher highs. But ultimately, I think this is in a super wide range, and I do think eventually we'll come back, right? So if we make higher highs right here, or that this was the top of the range and that we're now going to drop back down all the way here, doesn't really matter in my opinion on the long term. This is good to see, right? And then we can also see that the volatility index has dropped down a little bit over the course of today, and gold has also stabilized at least, which is good when we're talking about unrest. So in general, look, the S&P 500 at this point of time, I would say if you're DCAing into this, these levels are fine to buy. If you want to trade this, I would wait for a retest of this level right here around 5,720. That's personally what I'm waiting for with DCAing, because I tend to be a little bit more active in my buys for the S&P 500. Ultimately looks good, and I think with or without a pullback, I think we're heading for those previous all-time highs. And then once we actually reach that, we'll talk about whether we can actually break that, yes or no. And then finally, talking about Tesla. Tesla looks quite similar to the S&P 500, obviously. But when you look at that, first of all, after that major breakout here above $300, the trend has been up with our first main resistance level, in my opinion. Well, not the first main one, but the main resistance level we're looking at right now, being in this 4-hour uptrend, is the level around 390 and 400, where I think we'll find resistance. Now, should you buy Tesla right now? Because we're heading up there, in my opinion, no. We are in an uptrend, but ultimately the risks outweigh the rewards, I would say, at this point of time. So I would wait for either a pullback into trend, which would be around 325, maybe a little bit lower, or if you just want to accumulate Tesla for the long term, I'd say right now is fine, right? But ultimately that is up to you. And when we're zooming out, the best level, in my opinion, to buy Tesla would still be a little bit lower towards 312. And maybe even 305, which looks like a high confluence level where we still have some imbalances left to fill, and where we also have the daily trend. So yeah, but ultimately short term for sure still bullish on Tesla, and I think this uptrend will hold as well. But that's what I think you need to know about the markets for now. Hopefully it helps if you're interested in more stock market updates, but also like we did on Wednesday, some NVDA earnings expectations, etc. Consider subscribing. But for now, thank you for watching. Take care and bye.